The bounce back in 2010 was very strong because it was the reaction to the very sharp downturn in 2009. So that's almost a natural bounce back, that you have very high growth rates. That cannot be sustained. So what we are seeing now is a stabilization of that recovery towards more moderate and more sustainable growth rates. And what is really striking is that most of the developing countries are performing very well at the moment. Most of those countries have overcome the consequences of the crisis.
Let's talk a little bit more in detail, in fact, about the developing world. You estimate in this report that foreign direct investment has increased by about 16% in 2010, but the real standouts, net equity investment into developing countries, that's increased 42% over the course of 2010. Let me first ask you, is this what you mean by the bounce back in 2010? Are these kind of the indicators that we're referring to here?
The bounce back was much more related to the growth rates of production and trade. What you're talking about now is the return of capital flows to developing countries, which is also the reflection of the very strong performance in the developing world. It's largely also the reflection of the very low interest rates in high-income countries and a search for yield, which they find in especially the middle-income countries.
So you estimate that the developing world grew by 7% over the course of 2010. As far as sub-Saharan Africa is concerned, your estimate stands at about 4.7%, which is obviously, you know, quite a bit lower than the average for the developing world. Would you say that sub-Saharan Africa is underperforming? And why do you think that rate is lower? Where are the areas that are experiencing that 7% growth?
No, actually, sub-Saharan Africa is not at all underperforming. It's a very encouraging picture. If you would take South Africa out, then the growth rates of the rest of sub-Saharan Africa are again at 6%. And that is very broad-based. You see it in the East Coast, where agriculture has very good harvest. You see it in the middle, where countries are benefiting from the higher metal prices. And you see it also in the West, where there's a lot of investment coming in, increasingly from China and Asia. It is a very strong performance in Africa. They are very quickly back to where they were in the boom period before the crisis. And it's actually, when you compare it to most of the other developing countries, the most stable region now.
That's really interesting. And you know, when you talk about stability, we actually saw some instability and unrest in North Africa, specifically in recent days over the increase in food prices. You know, there's a lot of crop shortages. We're seeing food inflation even in Europe, here in the UK. Talk us through a little bit how concerning this is, what kind of effect it could have on growth in 2011. And I'm referring here, obviously, to Africa as much as you can.
Yeah, we are very concerned about the rise in the food prices. There are some similarities with the situation in 2008, when the food prices really spiked across the world. That is especially harmful for the countries that depend on food imports, and those countries are in Northern Africa, Algeria, the Middle East. We are concerned about it. At the same time, the situation at the moment is not as dire as it was in 2008. There are a couple of reasons for that. First of all, we are always talking about dollar prices, and those are not the most relevant prices for the poor people, the consumers in the developing world. And in terms of their currencies relative to the other prices they are facing, the agricultural prices are not yet as high. The situation is also somewhat better because for the basic crops, the stocks in the world are significantly higher than during the very tight situation in 2008. It is a much more diverse picture now, but for individual country, it is a very tough situation.
And finally, Hans, what will be the resounding theme, in your opinion, for 2011?
I think the resounding theme is a stabilization of the recovery, very much driven by the developing world. And increasingly, we see now that the developing world is the stabilizing factor and the driver of global growth. That is good for themselves, but it is actually good for the world economy and good for the high-income countries also.